We will now start the second plenary of the 7th Annual Seoul Climate Energy Conference 2020. In this session, we will have two presentations and discussion on the theme of Green New Deal and green finance. I would like to invite the moderator, Park Kwang-woo, head of the KAIST Graduate School of Finance.
Good morning. I guess we have session participants from around the world. We have Professor Marjun from Beijing now. We have Mr. Sharon from London. I guess, Mr. Sharon, I guess you're very early in the morning. It's 1:15 there?
Exactly, 1:19 a.m.
Yeah, 1:19 a.m. Great to have you here. So it's great honor, and I'm so pleased to have such amazing experts of sustainable finance in our group. We have a very tight schedule in this session with only 50 minutes. So I will let our three speakers, each one for 10 minutes presentation, and then we have two excellent discussants. They will give 5 minutes. And I guess then we will have 10 minutes left for discussion, so we can exchange some ideas. Each speaker or discussion can ask questions to others, and at the same time, if time remaining, I may ask my questions as well. So firstly, I'd like to introduce our first speaker. Our first speaker, Dr. Jun Ma, is professor and director of Center for Finance and Development at Tsinghua University. He's also chairman of Green Finance Committee of China Society of Finance and Banking, and a member of the Monetary Policy Committee of the People's Bank of China. So prior to joining Tsinghua, Dr. Ma served as a chief economist at the People's Bank of China. He was heading the research bureau there and played a groundbreaking role in developing the national green finance policy framework there. And before that, before working for the central bank, he worked for 13 years at Deutsche Bank, where he was managing director and chief economist for the Greater China. And Dr. Mao also was serving in the public sectors. He wrote many books published in major journals. Dr. Ma got his PhD in economics from Georgetown University and master's degree in management science from Fudan University. Would you welcome Dr. Ma?
Thank you very much. Can you hear me?
Yes.
Let me try to share my screen. Just give me 1 second. Can you see the screen?
Yes, we can see you. See your screen as well.
Well, first of all, thank you very much for inviting me to join this energy climate conference, which is very important for this particular moment, as many countries, including China, Korea, Japan, have recently declared a carbon neutrality target. And I strongly believe that green finance can play a very important role in driving the implementation of Paris Agreement and the climate agenda. So in the coming 10 minutes or so, I would just briefly introduce what China has done in the area of green finance and some of the international initiatives that we have been participating. And finally, if I have time, I touch upon the new topic of environmental risk analysis, just very briefly. Starting with China, when I joined the central bank in China in 2014, we began to discuss the notion of establishing a green financial system. And in 2016, the PBOC, namely the Chinese Central Bank, led the drafting of the green finance guidelines in China. And under the guideline, we have developed a framework, which I believe can be classified into 5 pillars. The first pillar is taxonomy, which defines what is green, and the purpose of that is to prevent greenwashing. And the second aspect or second pillar is disclosure requirement, which will make sure that the issuers and borrowers will disclose enough environmental information to the investment community. And the third one is incentives, because some of the green projects may not be making enough profits in the near term. In order to crowd in private sector money, we need to incentivize these project owners to make these projects more attractive to private capital. And the fourth pillar is the suite of products which need to meet various kinds of financing demand from green projects. And finally, we have focused on local pilots because China is so large, different localities have different conditions, and we encourage them to innovate the approach to green finance. Let me just give you a couple of examples of what we did under these 5 pillars. On taxonomy, China has now 3 kinds of taxonomies defining green activities financed by the green financial community. The first one, which came in 2013 by the Chinese banking regulator, is the taxonomy for green credit or green loans. At that time, it was very simple. It was only 12 lines in 1 page. And over time, we improved the taxonomy. For example, in 2015, I led the drafting of the Chinese Green Bond Catalog, which is a bond classification for green activities. And this document was long as 10 pages and with 31 categories. So it's much more detailed and operational. And the third category, third catalog, which was published last year by 7 ministries, is called the Green Industry Catalog, which is 60 pages long and 211 categories. So this is by far the most detailed and operational green taxonomies we have developed so far. The second aspect is the disclosure. China is gradually moving from voluntary disclosure towards mandatory. We have many kinds of disclosure requirements. For example, by Ministry of Ecology and Environment, they made a mandatory requirements for major polluters to disclose environmental information on a mandatory basis in 2017. And the securities regulator introduced a semi-compulsory regulation a couple of years ago, and they will be moving towards compulsory requirement for all listed companies and all bond issuers to disclose environmental information by the end of this year. And between China and UK, we have launched a pilot project that implements TCFD. So some UK financial firms and 9 Chinese financial firms have joined, and they are disclosing environmental climate information on a voluntary basis now. This is just one example of a bond issuer disclosing its environmental information, which includes the reduction of energy consumption, reduction of CO2, reduction of air pollutants, and so on and so forth, due to the investment in a green project. On the policy side, at the macro level, the central bank in China introduced a green relending facility, which offers low-cost financing through the commercial banks to green projects. And at the local level, various local governments offered interest subsidies and green guarantees to lower the funding cost of these projects. On products, over the past few years, we developed a system of many kinds of green financial products, including at least 11 trillion RMB worth of green loans. In past 4 years, we issued 1.1 trillion RMB worth of green bonds and set up 700 green equity funds. Beyond that, the financial community is innovating on many new products, including green ABS, green ETF, and various kinds of green insurance, including pollution liability insurance, green building insurance, solar insurance, wind insurance, and so on and so forth. And the carbon finance is also developing. Now, moving on to international collaboration, the highlight was the 2016 G20 when China was the host. And at that time, China initiated this G20 Green Finance Study Group, which is co-chaired by myself, representing China, and Mr. Michael Sharon, who will be speaking right after me, representing UK. And we successfully initiated 7 options, which were endorsed by the G20 leaders in 2016. So scaling up green finance became a global consensus since then. And in the following years, the study group introduced the concept of environmental risk analysis and creating sustainable assets such as ABS and CLOs to the capital markets. And in 2017, 8 countries' central banks came together, including those from UK and China, formed this NGFS, which is formerly called the Central Banks and Supervisors Network for Greening the Financial System. As of now, this network has expanded to more than 70 countries members and is still growing, which is becoming a very important platform for global financial policy makers to debate and develop consensus on how to improve and regulate the green finance market globally. And also about 2 years ago, the China Green Finance Committee and City of London jointly launched a set of green investment principles for the Belt and Road, which included more than 120 emerging market economies. And we are calling for global investors to embed sustainability into their corporate governance, to measure the environmental impact and disclosing such information, and adopting green financial instruments. And these principles were adopted by 37 large institutions from 14 countries and regions. And we're hoping that Korean financial institutions can also consider joining the GIP as well. Under the GIP, we have created 3 working groups. One is to develop tools for them to measure environmental impact. Recently, we introduced a carbon calculator, which is used by our members to calculate the carbon emission from their investments. And also, we developed templates for them to measure and disclose environmental climate information. And finally, we're launching a project database for green in the Belt and Road area. And the latest international collaborative initiative that we were actively involved is the China-EU-led working group to harmonize the green finance taxonomies under the International Platform for Sustainable Finance. This IPSF was launched about a year ago, and now China and the EU are co-chairing this new working group, trying to harmonize green finance and sustainable finance taxonomy between China and Europe. And my personal hope as a co-chair of this working group is that we may be able to produce a common taxonomy between China and EU, so that in the future, Chinese issuer can use a new common taxonomy to issue green bonds in Europe, and European firms can use this new taxonomy to issue green bonds in China. And such common taxonomy could be also taken as a reference by many other economies in designing or developing their own taxonomies. Just a few words on environmental risk analysis, which I mentioned earlier, that was promoted by the G20 and also by NGFS. And recently, as the chair of the NGFS supervision workstream, I led 2 documents, one of which is called Case Studies of Environmental Risk Analysis Methodology, that was published by the NGFS in September this year. And this document consolidated more than 30 methodologies and models and tools from around the world, including banks, asset managers, insurance company, on how to quantify the financial risks, including credit and market risk, arising from these financial institutions' exposure to environmental and climate risks. Just to give you one example how to apply such methodology, one of the teams that I lead has developed a model that estimates the potential non-performing loan ratio arising from lending to coal-fired power generation companies. And we show that under certain assumptions of energy transition, the NPL ratio or default probability will increase from 3% today to more than 20% within 10 years. So this kind of analysis is very important in convincing financial institutions that excessive exposure to high carbon assets may lead to financial risk to yourself, and thereby you need to manage such risk by reducing exposure to polluting and high carbon assets. Now that's all I'd like to share for the moment. Thank you very much for the invitation again, and I wish the conference a great success.
Thank you very much, Dr. Ma. Dr. Ma discussed China's policy on green finance and its efforts in coping with climate change. Thank you so much for your insightful talk. Our next speaker is Michael Sharon. Mr. Sharon is a senior advisor within the Bank of England. In his role, he provides counsel and independent challenge to the senior management of the UK Central Bank. Mr. Heron co-chaired the G20 Sustainable Finance Study Group with China and has contributed to bilateral negotiation and intervention on sustainable finance with a wide and diverse collection of countries. Mr. Sharon got master's degree from Harvard London School of Economics and NYU, where he studied finance, economics, philosophy, and public policy. Would you welcome Mr. Sharon?
Thank you very much. It's a great honor to be here. And actually, it's again, for President Kim and also yourself, Mr. Park, it's a pleasure to be back in Korea, albeit virtually. I must say, it's wonderful to be here, not just to be able to share thoughts and ideas around sustainability and climate risk, but also in a new era, I would argue, of where international cooperation has come back. I spent a good portion of 2019, actually at least 2 trips to Korea, had the fortunate ability to speak to many of the people that are probably even watching today in the public sector, private sector. And I congratulate Korea, but also in combination with Japan and China on the net zero commitments. And many people will remember 2020 as an incredibly difficult year, a horrible year related to the virus. But I must tell you, it's one of the most hopeful years I've seen, because when China, Korea, and Japan in close succession made this commitment, combined with the changes that are taking place in Washington, my hope for international cooperation has been is increased dramatically. And I think we have a great opportunity to do wonderful things, both in changing the real economy as well as the green finance. And with that, I'd like to start my chat with, you cannot have green finance without a green economy. And that's what the net zero is trying to do. Ultimately, that each industry and company within the industries are creating both products and services that ultimately are going to be net zero. To do that requires a tremendous transition, a change in how the products are made, how services are done, and those require things like CapEx, R&D, and those are the things that banks and investors finance. That is how green finance drives the transition of the real economy. And I think what's extraordinary in my 2 trips to Korea last year, it was very clear, and it's true of Japan and China as well, are all incredibly well positioned to transition their real economies. There are populations that are highly skilled and educated, strong financial systems, industrial bases, and I didn't realize the level of R&D investment in Korea is staggering. The amount of great ideas and the industrial base that drives those great ideas are quite astounding. So the opportunity of Korea becoming net zero is really a story of how this very talented opportunity comes together. So what I'd like to do is my close friend and my former co-chair, Ma Jun, it's always great to go after him, brought up some very important things in green finance. So how do you take that transition of the real economy and really start translating it? And I'll give you a real life example in the UK. As of 2030, you will no longer be able to export into the United Kingdom an internal combustion automobile. we will not be able to manufacture them in the UK, new ones for use. They will be completely barred. So we've got less than a 10-year window to start transitioning that piece of our mobility sector to be able to get the infrastructure built. And those are the tangible areas where green finance, both in loans, bonds, and funds, will absolutely be key. That's what's going to energize the financial system. So when you start thinking about that, there's key elements to the financing of everything. And one of them, and Dr. Ma brought this out, is taxonomies. Harmonizing them is one of the most important activities taking place. Part of that, again, as we talked about, is disclosure. And everyone's very well aware of the TCFD, which Governor Carney, along with Mike Bloomberg, championed. Well, the United Kingdom last week announced in 2025, TCFD will be mandatory in the UK. And this is where you start seeing that combination of things that are both mandatory as well as targets. So both taxonomies and disclosure are enabling elements to green finance. They help you, they provide the data and the information around it. One of the other key elements that Dr. Ma brought up as well is around collecting data from our banks. And a good example of that, and one was Dr. Ma brought up, but we've also been looking at here in the UK, the Bank of England did a very detailed study on mortgages within the United Kingdom. And as we started collecting data and looked at delinquencies as well as defaults, we found that basically mortgages that were on green assets defaulted less and had better recovery rates. And if you look at a financial system, whether it be Korea, China, or the United Kingdom, one of the largest concentrations of credit on banks' balance sheets are mortgages. So being able to actually understand that not only these are good for our economies, not are they good for the planet, but they're actually good investments is really important. I think those type of enabling devices around data, harmonization of taxonomies, and around disclosure are key. Now, a couple of the areas that we're really focusing on here in the UK, and London being a global financial center, are around green products. And those are bonds, loans, and technology. And I think a third element that was brought up in the previous state area along with that, a complementing piece, is around carbon trading. So as you start getting the real economy financed properly, the key to net zero carbon, or at least the operational word, is net. We're not going to be at absolute zero carbon in 2050, 2060, but we need to be at net. So that means the financial markets need to be players, very important players in the net carbon trading to start offsetting it. Again, you're seeing the financial industry playing a key role in enabling the real economy through financial products to reach that. So that combined with green bonds, and again, the UK government just announced we will be issuing a green sovereign bond next year, a very powerful signaling device, both to the population here and as part of the wider community. And additionally to that, we've announced that as part of COP26, a variety of initiatives that I think are going to bring countries together. With these three commitments in Asia and with the US changing, I believe we've got the opportunity collectively to bring back international cooperation and to be able to actually start putting green transition and green financing to work in a way to accelerate the movements both in Asia, Europe, and the Americas. Thank you very much.
Thank you very much, Mr. Sharon. Mr. Sharon, start with how important it is to have an international collaboration among these three countries in the Northern Asia, and then you move on to the green finance initiatives in UK and Europe, particular attention to the taxonomies, and then move on to the green products that UK is now developing. I was very impressed by the green sovereign bond that UK government is going to issue soon. I think we might not have a long discussion after all the presenters will talk, but there is already a question from the floor, but you can answer now or later on. People are talking about this COP26, which will be soon being had next year in Glasgow. And the biggest initiatives there is the green finance agenda. So you might think about it, or you can answer now about your prospects on the next year's COP26.
Just very quickly, I think that's a great question because COP26, because of this bringing together the opportunity for international cooperation like we didn't have a year or two ago, is going to make Glasgow a real catalyst position. And you're going to see things, as I mentioned, around a disclosure, around products, and actually even the Bank of England this next year during this will do its first stress test for climate in the financial service industry. So I think what you'll see I know what you'll see in Glasgow. And by the way, you probably know this, but for those who aren't aware, that Governor Carney from the Bank of England, albeit has left, he is the key organizer and special envoy to that. So we remain to keep that, as well as Andrew Bailey, who is our current governor, was the one who gave the approval for the G20 work with Majun and I. So I think you're going to see a lot of the familiar names and faces in international cooperation come together, unlike many other COPs. And I'm hoping we can achieve things similar to we saw in Paris 5 years ago.
Thank you. Thanks for sharing the most updated information on that event. Okay, let's move on to the next speaker. In Korea, we have two international organizations on climate change and sustainability. And one is GCF, Green Climate Fund, and the other one is GGGI, Global Green Growth Institute. And we have a very special speaker here today, Mr. Leo Hyung-gun Park. He's leading the financial institution team within the private sector facility of GCF. He also acts as a corporate sustainability officer of the fund. Prior to joining GCF, he used to work for climate finance and project finance team for Korea Development Bank. Leo got his bachelor's from University of Warwick and his MBA from NYU. Would you welcome Mr. Park?
Thank you very much, Professor Park. I'm audible? Okay, thank you. Let me just share my screen. Okay. Yeah. So thank you very much again for your warm welcome and offering me a great opportunity, to share my view and also partly the GCF view, and try to see how we can leverage the green financing mechanism to finance the Green New Deal that's becoming quite trendy across the world. I think I can keep my intervention quite short since most of the stuff I was going to discuss or have already been covered by both Michael and Dr. Majun. So thank you very much. And then I'll be focusing mostly on what kind of support GCF can provide with some of the very key examples, and I can also spend a couple of minutes to share what's happening in Korea. Although we do have the panelists from the Korean governments today, but I can at least tell you what we've been what kind of help we've been offering to Korean governments in terms of the drafting a bill on green finance. So yeah, I mean, as Michael said, right, we definitely need a transition to green economy, and to do so, we of course need to break down the barriers from both supply and demand side to achieve the green transition. And some of the barriers from the supply side still includes the lack of climate strategy and the capacity, because many actors still find it difficult to evaluate the economics of a climate project And there is still a high perceived risk when it comes to green investments in terms of the long payback period, etc. And there is still room to make further improvements in terms of creating more enabling environments, and which can include regulations to give it further impetus. And those from the demand side include still the limited awareness. So we still need to do more work on awareness raising, on green business opportunities and climate technologies. And this is where we can also help the local small and medium-sized enterprises as well. And there is still a high upfront cost of climate technology, and the low accessibility to affordable financing, which also we are trying to help with. And then there's a limited technical capabilities to access the climate finance as well. And this is where many developing countries especially need support from international climate funds like GCF. So yeah, of course, there are many green finance initiatives, and most of them already been again covered by Dr. Majun and Michael. And of course, there are national ones such as the UK's green finance strategy and EU's sustainable finance action plan. And then there are of course industry-led ones, which include the TCFD, the Task Force on Climate-Related Financial Disclosures, Partnership for Carbon Accounting Financials, etc. And then there is one important also movement to spread the green bank concept across the world. Of course, UK had been one of the runners when they set up the UK Green Investment Bank. Although it's with now Macquarie, I think they are still very active, in terms of providing the necessary capital for green, transition across many countries in the world. So basically, what GCF intends to do is to green the financial system using our instruments. So the first pillar is to use our funding proposal and project preparation facility to offer the concessional and affordable green credit lines either through the financial intermediaries or directly to projects. And we also have the project preparation facility, which is a grant funding that can be used to develop green investment pipeline. And whenever we provide the non-grant instruments, we usually almost always provide technical assistance and the capacity building support on top of that, which can be used to implement environmental social risk management systems to be embedded within, for example, the national development banks. And then there is a readiness program, which can be most relevant to support, for example, the work of NGFS, because the readiness program can be used to make the policy level interventions. So this is a grant funding that can be, supporting central banks or regulators to, comply with all the recommendations made by NGFS. And by the way, GCF is also a stakeholder of the NGFS, just in case you weren't aware. And then the last pillar is related to the awareness raising and outreach. I already mentioned to you about our involvement in NGFS. And we also work very closely with the International Development Finance Club. We just recently launched the joint publication with them for the first time. And then we also hope to work closely with the IFC Sustainable Banking Network, again, to help the local actors, which include, again, regulators, as well as the Association of Banks, to promote development of green financial markets. Let me just share with you a case study, which has been recently approved, which is a Mongolia Green Finance Corporation. This was a project that approved 3 weeks ago during our latest board meeting. So this is in line with the green bank work that we've been promoting. So we'll be setting up a green bank in Mongolia, and this has many unique features because it will be probably the first time where the public and private sector investors will be joining forces by holding equal shares of this green bank. together with the GCF. So the MGFC will be funded by, again, GCF, the government of Mongolia, as well as consortium of the private sector banks. And there will be, again, on lending through the local financial institutions to finance, first of all, the energy efficiency related project. And GCF will also provide, both subordinated and senior loans to buffer, the capital basis of the MGFS. I already mentioned to you how GCF can provide the different instruments such as readiness and project preparation facility, and this was the very unique case where GCF used all three instruments. So we started this work first with the readiness program, where we hired the GGGI as our delivery partner back in 2017, who conducted the scoping study and to develop business model, etc. But we still found some gaps. So in 2019, we actually hired Macquarie GIG as a consultant. It wasn't us who hired the Macquarie. It was actually Hasbank, our accredited entity in Mongolia, who hired, again, Macquarie as their advisor. And they are the one who developed the guidelines for governance structure. And they, of course, tried to benchmark to the extent possible in the work they did with the UK Green Investment Bank. And then finally, the project, like I said, was approved a couple of weeks ago. So it took us a long time, but we managed to get this project approved, and we are very excited. And we hope to replicate this type of model across other countries. So just quickly on this special act on promotion of green financing in Korea. As you know, Korea, of course, is not a recipient country of GCF funding. But we've been trying to help them as much as we can as a hoster country of the GCF. So in that respect, we've been helping one of the National Assembly member to come up with a special act on the promotion of green finance in Korea to help achieve the 2050 zero carbon target. One of the initiatives include the creation of a Korea Green Investment Bank with the initial capitalization of around USD 5 billion. And then the others, of course, are very much in line with what Majun has already done or is trying to do in China, which include the development of national green taxonomy and the adoption of mandatory climate-related information disclosure in line with the TCFD recommendations, and also to work with the regulators and central banks identify and management of climate risks in line with the NGFS recommendations. But I'm sure our colleagues from Ministry of Environment and also the former governor Liu will share more details on this. So this is the last slide. So we at the GCF actually published a document last year, which is called Driving the Transformation to a Climate Resilient Financial System. So those who are interested in learning more about how GCF can support the transition to the green or climate resilient financial system, I would like to invite you to take a look at the document. And then, of course, you can always feel free to reach out to me anytime if you have any questions or suggestions. Thank you.
Thank you very much. Mr. Park first introduced the role of GCF in international collaboration, and then he moved on to how GCF is channeling climate finance to many developing countries, including Mongolia. So Mr. Park gave a good example of Mongolian Green Finance Corp. He then lastly shows what kind of legislative and effort is being made in Korea by introducing us the Green Investment Bank in Korea. Okay, then let's move on to our next speaker. We have two excellent discussants from Korea. Our first discussant is Dr. Kwang-yeol Lu. Dr. Yu took various senior positions at Ministry of Economy and Finance and also at Financial Services Commission, including the Director General of International Financial Cooperation, Commissioner of Financial Intelligence Unit, and Standing Commissioner of the Securities and Futures Commission. Until recently, he was the first Senior Deputy Governor of Financial Supervisory Service. Doctor, you graduated from Seoul National University as an undergraduate econ, and then he got his PhD in economics from University of Texas at Austin. Would you welcome Dr. Yu?
Thank you, Professor Park, for inviting me to this conference. I'm very nice to seeing you, Leo Park and Michael, and also President Kim. I'll be very brief. And as Michael pointed out, I think that there will be no green finance without the green economy. And in that respect, and Korea is not a fast mover, but I think that the difference between the fast mover and Korea will not be huge. So I have a higher expectation for the Koreans' initiative going forward. As Leo mentioned, there are several international initiatives in financial sectors among regulators, so I'm not going to talking about that. So in the case of Korea and my former organization, Financial Supervisory Service, last year we started to working on those joining those initiatives, and we created a working group made of senior bankers and other important executives in financial sectors to do stock-taking exercise of best practice on climate-related finance in the financial sectors, and also follow up on international move like NGFS and TCFD to better prepare for the required action driven by climate change. And also FSS started, we have a very well-defined stress test model measuring the impact of capital adequacy of the financial sectors on various, in response to various external shocks. So we embark on a stress test on financial sectors to quantify how climate change undermines assets held by the financial sector, and reviewed how to design a way to disclose climate-related risk and opportunities. And also, as a bottom-up approach, some pension funds and banks, holding companies and insurance companies took bold measures to stay away from the stranded assets. So now we see that bottom-up and also top-down, there is strong move towards low carbon economy. And of course, the recent critical moment comes with the government's commitments to Green New Deal projects as a way of COVID-19 responsive package, and also the strong commitment of the governments to carbon net zero by 2050. So I guess that from now on, already it's in the pipeline. I think the Ministry of Environment, also Financial Supervisory Commissions, which is an government body in charge of the economic policy and financial policy making, is taking steps. So let me just briefly talk about 4 main pillars for green finance in the pipeline by the government sectors. We're now strengthening the risk management caused by climate change. So we try to define and quantify the risk associated with the climate change driven change. Of course, we need some common assumptions and prerequisites to do some analysis, but this requires some global coordination. But we will, in due process, will define and quantify the risk, and we'll try to internalize the risk in the supervision context. Now it's in the best interest of the also Korean financial companies and financial sectors to incorporate the risk related to those climate change. And it definitely have an impact on the quality of the assets and portfolios. Secondly, like others pointed out, Korea will join in enlarging disclosure of the environment-related information by listed companies. So we're providing guidance for the best practice and information disclosure in an early stage, and try to provide training program for environmentally responsible investments. And thirdly, I think that in line with other government bodies, and government will increasing green investment and providing some policy incentive, fiscal incentive to facilitate investment green projects. And we're also working on, as mentioned, the green taxonomies and guidelines for green finance. Of course, green bonds and funds and loans and guarantees, all types of the fiscal financial instrument will be available through policy banks and others to facilitate investments. Also, we try to encourage evaluating the contribution of the pensions and institutional investors, the impact on those climate change related investments. And finally, when it comes to sustainable green finance, we'll coordinate with the other bodies joining that international discussion bodies, NGFS and TCFD. A bit late, but we'll in due process following the steps, and also government body, and FSC, and creating as committees and units serving for green finance to maintain the momentums and to follow up our initiative. But still, it's early stage, and I think the government made a promise by the end of this year, we'll have so much more specific green finance initiative in the context of the financial policy and regulators' perspective, and we're looking forward to seeing the specific outcomes going down the road. That'll be my brief introduction of the Green Finance Initiative in Korea. Thank you very much, Professor Park.
Thank you very much, Dr. Yu. Dr. Yu was the chief government officer for the international collaboration when he was in the office. So we got his good insight for this international collaboration for climate change. Our next speaker is Dr. Hwang Song-tae. He's Deputy Minister of the Ministry of Environment in Korea. He was heading this, and he was extensive experience in environmental policies within the focus on water, air, and climate change. Dr. Hwang obtained his BA from Yonsei University, Master's from Seoul National University, and a PhD in Public Affairs from Indiana University. Would you welcome Dr. Hwang?
Yeah, thank you. Thank you for Professor Ma and Mr. Sharon for sharing interesting and updated progress taking place in China and UK in the field of green finance. And nice to see you, Mr. Park, my friend from GCF via internet. Thank you for the insightful presentations. I'd like to share the status and progress after the launch of Green New Deal in July this year and the announcement of 2050 carbon neutral target in November. I would like to highlight the relations between Green New Deal and the carbon neutrality ambition and green finance in this short talk. As you know, in July 2020, the government announced the Korean New Deal plan as a comprehensive stimulus package for the recovery from COVID-19. The deal has been introduced with a major fiscal plan of injecting total 160 trillion Korean won by 2025. The Green New Deal, together with Digital New Deal, is one of the two pillars of Korean New Deal. It includes 8 projects under 3 key areas, which are transition to low carbon decentralized energy, greening of cities and infrastructure, and green industry promotion. Total 73 trillion won is expected to be invested, of which about 43 trillion to be funded by government, aiming to create 660,000 new jobs and cut 12.3 million tons of greenhouse gases. Since the release of the plan, the Korean New Deal strategy meeting, chaired by the president himself, has continued to monitor and review the progress to improve the tools and strategies of the deal. We see the world paying attention to climate change keener than ever amid the election of Mr. Joe Biden as the President of the United States. An increasing number of countries, including major economies like China, Japan, have been pledging a carbon neutral target. You may know Korea has also joined earlier this month. Our Green New Deal will need to evolve, fully incorporating such climate ambition. The Korean Green New Deal now is more like a fiscal investment roadmap by 2025. We recognize the need to constantly update and reinforce the deal by defining long-term direction after 2025 to become carbon neutral by 2050. More segmented measures targeting circular economy, agriculture, and other important sectors need to be come up with too. Our government will continue to improve and build up Green New Deal toward 2025 and beyond. The Korean Green New Deal consists of a set of concrete projects that require sufficient and timely resource flow to work properly. Although we expect the major fiscal injection by the government will make a pump primer, making private investment work is to sustain the project's success in the long run. Our government understands this point to include the green finance promotion as an important strategic element of the Green New Deal. In perspective of Ministry Environment, we are focusing on 3 priority tasks to promote green finance in the private sector. First one is developing Korean taxonomy. The core of green finance is offering financial incentives to green industry or business practices. To make the incentive work, we need to define what is green and how green one should be to receive the incentives. Our ministry is conducting a series of research to develop our taxonomy with reference to those of EU and ISO, and the result is expected by the end of this year. Early next year, we will start pilot implementation of the taxonomy, and a green investment guideline will be developed based on it within 2021. Second task is establishing the framework for non-financial reporting, aka environmental, social, and governance ESG assessment, which enable investors to make a greener investment decision. Surveys and research are underway to develop the ESG assessment framework with a view to introducing it to the market from 2022. The last one is strengthening the public disclosure of corporate environmental information. We are now undertaking expert and stakeholder consultation to set out the range of business and financial institutes subject to the disclosure scheme. Meanwhile, we intend to encourage listed enterprises to carry out voluntary corporate sustainability reporting through providing guidance and education. Besides, in collaboration with the Financial Service Commission, our ministry has established Green Finance Task Force, which will facilitate the priority task I explained. Through the TF, we are also endeavoring to nurture green finance human resources and expert institutions while enhancing cooperation with the international green finance initiatives such as TCFD. Thank you for your attention.
Thank you very much, Deputy Minister Hwang. Dr. Hwang has given us a good explanation of Green New Deal plan in Korea, and then Dr. Hwang gave how Korean government is making progress and exerting their every effort to make this Green New Deal policy as a way, an opportunity to make growth, while at the same time we are coping with the climate change. Thanks for your insightful discussion. Now we are a little behind time, but we may have some discussion. So let's first go back to our 3 speakers. I guess our 3 speakers are still there, and you heard about the discussions, comments, and at the same time, we have some questions I got from the floor and by myself. many people are talking about the return of the U.S. to the Paris Agreement, and especially here, we see these two largest economies, China and U.S., at the same time, two largest polluting countries. Their collaboration is most important. So we have first a question to Dr. Ma, that how do you expect? Is Dr. Ma still there? Oh, Dr. Ma is gone. Dr. Ma is gone. So then, how about Mike? Mike, Sharon, do you have any thoughts about this?
Yeah. Dr. Ma and I, as you know, we're the co-chairman of the G20, and we saw when the U.S. left, there was a real loss of weight in the discussions. And I think what's realistic to think about is not every problem in the world's gone away. We still have to deal with Corona. There's still trade issues, a variety of things. But the importance of the U.S. coming back to the table, and the fact of China joining other countries with the net zero, allows a common denominator that the two of them can sit together. So the other issues are still out there and they may disagree on that, but having green as a common denominator at the highest level of both of those countries, I think you'll see things like the G7, which will also be in the UK next year, COP26 and the G20, which will be in Italy. All those venues, you'll be able to see China and the United States sit down together with the rest of the countries. And so I think it's a big deal for the two of them both to be back to the table.
Thank you. Yeah, actually, Mike used to work with this G20 Sustainable Finance Study Group with China. So thanks for your insights. How about your response to the discussions, comments on this international collaboration among not only China and between China and U.S., but among China, Japan, and Korea?
As I mentioned in my talk, I think that is without a doubt where all growth, the growth engine of the world, is really in Asia. So having China, Korea, and Japan coordinating on this to have green sustainable growth will be not only leadership positions for these three big economies, but for the fastest growing part of the world, but also will all the rest of the ASEAN countries will also be part of that. So I think you'll see that overflow, that leadership overflow into Indonesia, Malaysia, Philippines, other parts of Asia as well. So I think not just the US and China, but the three large Asian powers, economic powers agreeing on this will also deliver great outcomes for growth and jobs in Asia, but also green sustainable jobs in Asia.
Thank you. Leo at GCF is still there. Okay.
Yes.
So I guess GCF is also looking forward to return of U.S. To Paris Agreement and their greater contribution for GCF. How the people there are thinking of this?
I mean, they still owe us $2 billion. So, so we'll be definitely, knocking on their doors to collect the remaining $2 billion pledges. So we are, of course, we are very excited. We are very, very excited. And of course, in terms of further promoting this green finance work, it would be great if FRB, of course, joins the NGFS. I'm sure that will be the top priority for NGFS to make sure they bring, the US on board. Yeah, but I'm sure, the collaborations in terms of, in the context of Paris Agreement, will be, stronger once US comes back to the game.
Okay, thank you. Dr. Yu, so I guess you used to work for OECD and the embassy to China. So I guess you have a very rich experience with this international collaboration. How is this, especially with issue of climate change and environmental measure when you are working with the Democratic Party government in the US?
I guess that, like you pointed out, I think that when Biden becomes the next president of the United States, I have a high expectation for all those agreements. Of course, Korea is not a front runner in this context, but clearly, when I have a chance to see my colleagues in trilateral meeting in Japan, Korea, and China, also a meeting, international meeting, something like integrated financial bodies meeting, we have very diverse discussions. But I think that there's at that time, there's a lack of strong momentums going forward. But I think that right now, as many of you pointed out and agreed, I think that there's a clearly international move towards the low carbon economies, and now that using carbon, the cost of using carbon is now relatively higher, and it's not feasible. So I guess that under this context, I think that international cooperation will be much easier. And I think that it's a pity that I'm no longer as part of the governments. If I was there, I'm sure that I'll organize trilateral meeting in China, Korea, and Japan. The high-level regulators meetings between Korea, China, and Japan. China is a CEB, IRC, and Korea is the FSS and FSC, and also Japan's FSA, and they're all vice governors level meeting. But unfortunately, I'm not able to maintain momentum. But clearly, I'll tell my colleagues and working in the government sectors to sustain the momentum and strengthen the momentum. Thank you.
Thank you. Deputy Minister Hwang, you used to host all the most important positions at the Ministry of Environment, including Director of Climate Change, or especially International Cooperation. You used to be Director of International Cooperation Bureau and also Director General of Air Quality Pollution Bureau and Climate Change and International Cooperation Bureau. So how the new administration in the U.S. will change international cooperation in climate change, especially for Korean government?
As you know that United States is the second largest emitter of greenhouse gas, and we know that United States is the great superpower in the international arena, and I'm just reading the president's announcement of this morning. The president has a meeting with the ministers about carbon neutrality 2050, and my president emphasized the importance of put a lot of effort to change. To make a transformation of our society into a carbon neutral one. So he talks about, especially talks about the close international cooperation between EU and Korea and the United States and Korea. There's this international cooperation and the global leadership for carbon neutral society in 2050 will be rapidly facilitated by the new president of the United States, Joe Biden, and it helped us to promote, to facilitate the domestic effort to make Korea carbon neutral. So I feel very optimistic. The election of Joe Biden rather than Trump, re-election of Trump. So I'm happy to see the changes in the United States. I look forward to making this opportunity to make the world and Korea carbon neutral in the future. Thank you.
Thank you. So it seems like from your face, it's like the more bright future we can have concerning this coping with the climate change. Okay, thank you so much. We have amazing, so much professional and expert group of speakers and discussants, and I myself learned a lot. So please stay tuned with this YouTube channel for the rest of the day today. And we can share all the new issues, agendas going with climate. Okay, thank you so much for being with us, all the speakers and discussants, especially Mike Sharon from London. I think it's time for you to go to bed. Thank you so much. Okay, so
Thank you.
this is all for today. Thank you so much.
Thank you.
Thank you all for your great discussion. As a UK citizen, I was especially motivated by the discussion of COP26 and the potential for it to be a catalyst for green finance. And I hope that despite the pandemic, it seems that many of our speakers are emphasizing that, in fact, 2020 is a year for optimism, given the cooperation of China, Japan, Korea, and the US.